Okay, Fibonacci here. I want to talk about Twitter stock. Remember, I've been teaching some day trading here. Today is December 30th, and I'm right again. I've called a short about 5, 6 days ago, and Twitter continues to go down today. It's down 9 cents to 1630. Let's kind of look at it from a day trading perspective. Remember, I trade Elliott Wave. If you would like some stock market updates, remember, email me americano417@gmail.com. You like this content, just share it. Now, remember, I've been trading for about 20 years, and I'm looking for a 5-minute chart here as we speak. I've been charting. I've been in and out of the markets for 20 years, and I primarily use Japanese candlesticks. Obviously, my primary method or strategy is Elliott Wave, which is a Fibonacci, kind of a fractal math economic theory. Now, Elliott Wave is built upon wave theory, and it's applied towards the markets, and I trade via Elliott Wave. So let's look at this as a kind of do a recap here. I already told you it was down 9 cents. This is what the daily chart has looked like. It's down to 630. What I'm looking for, now remember, if you remember, right before Christmas, if I can hold my camera still, kind of get my pointer out here, I called a short right here. I don't know if you can see that. Called a short right here. It's continued to go down. It consolidated. What I did is I told you to close your positions, or I suggested if I were trading, I would close my position once it stabilized. But I'm still short, or I would still call a short on Twitter. That still looks like a 5C wave. One thing that I would look at though is depending on how quickly you can trade the market. I never know if I'm talking to a person who's sitting in front of their computer, or maybe just a person who's just kind of casually looking at it. But what I'm doing here is I'm looking at the fourth wave, which is this right here. I'm looking at this candle, and I'm seeing what that low is. Let me kind of check it out here. This low here is 1616. Let me just draw a line here. Obviously, based upon Elliott Wave and some things that I've taught you, once Twitter drops below 1616, then the short is what I call confirmed. Let me kind of zoom in here. Let me look at this on a 5-minute chart, make my life a lot easier. Here, instead of trying to hold the phone and trying to teach here. This is today's activity. Now notice that it did collapse below the 2 wave, and I'm looking right here. And so what I would do if I were you, if I were trading this real time, is I'd wait for the market to open. If it dropped below 1616, obviously I would short it again. If it does not, if tomorrow opens up flat or up, then I would turn my position to a long. That's why it's really, really important to have a margin account where you can open and close positions, and there's no limitations. Sometimes if you trade below 25,000, you have a certain number of trades that you are limited to. But going in tomorrow, obviously it's in a fourth wave. I would confirm the fourth wave. How do we confirm the fourth wave? If it drops below the 2 wave. If it drops below the 2 wave, we know that we need a short. If it stabilizes, it goes up, then obviously we need to go long. If you have any questions, email me americano417@gmail.com. This is Twitter, TWTR, on a 5-minute chart. Email me if you have any questions, americano417@gmail.com.